First one. Good to see you, Daniel. More will follow in a minute, I think. Hi, Martin. Good to see you as well. Let's wait a moment for more people to join. Then I'll get into the price action. Welcome, Bren, as well. And Slatan, as always. For some reason, I can't see how many people are watching, but at least some people are in the chat, so that's a good sign. Ah, here, I see it. Okay. I will go over the price action from the weekend and the long I took there. And right now, I'm keeping an eye on what happens here. But for now, demand is in control. Because each time, like here we came back for this more refined or like the broader demand range, where we had this local range, then broke upwards. So this was once again a clean example of a range, initiation, mitigation, continuation. So again, this demand range held. And very locally, price is doing the exact same, where we are basically trending up, break higher, retest, break higher, retest, break higher, retest, move higher. So for now, we see that demand is in control. So let's see if we... Yeah, so I'm putting an alert down here. Because if we lose this level, it will be the first sign that demand is failing. Could be a sign of weakness, but until then, this could just go higher. So I have also an alert at the high for the local levels. And then I will now start at the range, because we had some interesting price action, especially last Friday. Let's clear this up. And the way we came up into it right here was, to me, too strong. So I was expecting like at least the retest of the range high or new highs. And we are now going for that new high scenario. And then last Friday during the stream, price did a tricky move by taking like literally all the liquidity right here, but just front running that ultimate high and then reversing, where a lot of people entered short, basically got trapped, which I also said in that video before. Like if we consolidate here, a lot of people are gonna short, and that later is probably fuel. And that proved to be true, because if we look at the bigger picture, we basically had this high, higher low, higher high. So any move into here could be just a higher low for a higher high. And this is why I was not feeling the short too much, because like we had internal structure broke bearish, but if we just look at it from a range and market structure perspective, then this was our range. right here. If you refine it more, you can say this is your range. Range, initiation, mitigation, continuation. So this could once again just be a range retest before higher. And that was also my main expectation, to see price holding here. And then we did the trick we did more often by taking the volume profile from the start of your local range till your breakout level. Then you see your value area high and your point of control of that local range. And that is the level you want to see hold if price retests it. Because the purpose of this range was to push price higher. So if price retests the point of control, that's where you want to see buyers step in to push price higher. So if we extend the point of control, then that is exactly the level price held. Right there. So this was basically just a range breakout, retest, continuation. And then I marked out this local downtrend with lower high, lower low, lower high, lower low, lower high. And that I wanted to see that break back to bullish. So eventually we had this move down. So this was basically the market structure confirmation, but I already entered before because it was on Saturday and I was just enjoying my weekend. But I saw price retesting this key level and also forming like kind of a rounded bottom, showing that buyers are stepping in here. Because here you have sellers stepping in, price aggressively moving lower. And here you see that it's rounding off, meaning that buyers are absorbing price. So I took the long. Normally I wait always for market structure. However, this time I knew like if we break this high, then probably I'm not watching the charts anymore, or I have a little bit too much of beer, so that I'm not could not make wise decisions anymore. So I decided to just front run my break structure level and instead use this low, so the value area low of this range, as my invalidation, basically here, in which I knew that if we break lower here, going all the way to your value area low is clearly a sign of weakness. And I said we want to hold this point of control. So I just gave my stop a wider room and then price moved higher. And normally I like to wait for the market structure, in which this could have been the entry as well, which would have been better. Entering after the breaker structure, stop loss there, and then target here. Yeah, would have been a 3R trade, or more or less the same. So this was the idea I had in mind before, but because I was not behind the charts, I just gave it more room. And then the moment we were here, I trailed my stop to that low, in which it was basically a risk-free position. And then yesterday I took some profits around here. And this morning took almost everything out when I woke up and price was taking out that range high. So that one played out nicely. And right now, I think a lot of people are looking to short this. And I can see the case as well. However, I think a lot of people will still be trapped here. So I'm trying to not zoom in too much and just watch structure again, which from this low is basically high, higher low, higher high, higher low, higher high, higher low. And we took out the high. Technically, this is our market structure low right now on the 15-minute. So until we also have demand resting below it. So until we break this, I think we can push higher into that supply. And the risk is that a lot of people have shorted this high or right now here, and that you then are scared to miss out on a short, so you step in again and again and again. But how we now could also see it is just like that range gone. This was our range high. That until we fall back into our original value, which is this level right here, that this could just be a deeper mitigation into the supply before reversing. So I'm now more seeing it like that. And then like the 15-minute structure is also a 2-hour structure. So that's pretty significant. So we have high, higher low, higher high. Maybe we make a higher high, but then 2-hour structure is significant structure to use. And then also with local demand. So the moment we fall back below here, that's a super clean sign of weakness that you can look for a lower high for a lower low and then take all this liquidity. Until then, I think we could very well make new highs into 67, 66, potentially this whole zone, because we have a few refined levels in it. And if we look at what the range deviation is, so this is step 1, this is step 2, so you can extend your range to that high. Then let me lock it, otherwise it will be, let's see, right there, lock it. Then the range deviation threshold is at the 77.5k. So if we look at it from that perspective, price could move all the way into here and then still produce a bearish peer retreat. Let's see, range, then make the border red. For example, that this week we give a bigger push, maybe today, tomorrow, and Wednesday we have FOMC, which is always a event the market makers can use to manipulate the whole market. So if we push higher today, then maybe we consolidate into that event. During Wednesday, spike higher, sell off, and that we then get that reversal. This will be my main idea still, which would look very similar to our former range, where we basically had almost the same, where you can see that naked low, and then right now we also are building a super nice liquidity. There we had like an internal local distribution right here, but then we took the high. This is also where like a lot of people started shorting and thought that this was the reversal already. But then price made a super aggressive move higher. Like even here, push up, higher low, retesting that range high, then the higher high. And then we consolidated for a bit before breaking lower, giving us the very similar PO3 as that price is currently potentially showcasing. So I think that, at least for me, is the main scenario. And then we can either form the high today, because it's Monday, so it's always the day, like most weeks we form the high or the low on Monday. But since we have FOMC this week, I think we are more likely to form the high tomorrow or Wednesday with like a spike higher. And what would not surprise me at all either is that we chop. So either we push higher or we can see this as our new local range for the time being, which is a super nice one because this is also market structure. And this is what 9 out of 10 people forget. You draw your ranges at swing highs and swing lows. So you have higher low, higher high, higher low. Now this is your swing high, this is your swing low. Which means that if you SFP your high, then the low becomes a weak targeted level. Then you get that rotation. And if you SFP the low, so do not break your market structure low, you SFP your market structure low, then you return back to your high again. And then you have 1, 2, 3 potentially, or 1, 2, 3. So not each deviation is the same. It has to be a market structure high, market structure low, and then if you take the high and do not close, you can expect rotations. So I would also not be surprised if we range here tomorrow and then everyone is gonna short it with their stops here or gonna long it with their stops here, which means liquidity is building on both sides, and then you get FOMC, spike, spike, and then continuation, or the other way around. But market makers love to create liquidity into events like this. So either they're gonna trap people by pushing it higher right now and then giving a very hard entry to short, or just chop around here, let people build positions on both ways and then take out both sides and then reverse. So that are the two scenarios. For the long side, I'm interested at the range low as always. For shorts, around here, but yeah, as said, I would not be surprised if we just continue higher into 76, 75, and then look for a new range creation or for shorts from there. But at least I'm not in the camp that needs to be short right now. I think this has legs higher. The market structure is still bullish. So let's see. Welcome to the new people in the chat. Amar, TCT, good to see you. Sudo as well. Almost every stream here. Appreciate it a lot. Kijos as well, and Arno the Weird. A lot of familiar names each time, so that's amazing to see. Then that's my view for BTC. Do I have more to say about BTC? Yeah, so I know a lot of people have shorted the former high for potential Model 2. Right now, people will start to look short this again, also because you have this liquidity buildup. However, like I know I've been also trapped so often that market is moving higher. So you draw your range from high to low and you see liquidity being generated. And then the only thing you see is this is a short. I'm gonna Siri, shut up.
Sorry, ik begrijp het niet.
And then the only thing you see is like, oh, this is a distribution. I'm gonna short this. However, liquidity like this is only valuable when your market structure breaks. Because without market structure, this can also just be buyers having control over the market and therefore pushing price higher. You need your market structure confirmation to expect a rotation to all that sell side liquidity. And that's why it's dangerous to see every uptrend as a distribution, because then you're always on the wrong side as long as you keep moving higher. So also here, until basically this higher low, higher high, higher low, higher high, higher low, higher high, this is just a mitigation of this demand. So if this makes a new high, then you simply have just bullish market structure until you start breaking below this low again. This is basically a range, local range, breakout, retest, continuation into proof and otherwise, aka Rimsey again. Range, breakout, retest, mitigation, continuation. And then even here, this is also like here, breakout. So this retest is just a mitigation, continuation into proof and otherwise. You can also put an alert down here. Because normally if you have range, then you want breakout, retest, continuation, And then this internally also just continue higher, like this, and not make it too deep of a pullback. Then let's quickly look at USDT. Where is the normal USDT? Let's see. Um, that is gone for some reason. This one, yeah. So this one has been in the same range. And there we had like basically the range low, range high, and then this internal move down, where this was basically the downtrend. And then last week, we had this front run of that range low, but main structure remained bearish as long as we stayed under the mid range, because we basically have low, lower high, lower low. So then if you break above here, let's say, then you break structure, but else you just have main structure bearish. And right now we took out the range low and are now consolidating below the low. So then you can always watch, do we potentially form deviation for potential accumulations, or is this just bearish market structure, which is the lower low, lower high, lower low, lower high, lower low. So what you can do then is to use your deviation threshold. And the low is here, so you don't want to close below this red line. And then watch, like, what did price leave behind? If it wants to load. For some reason, the chart does not work. Yeah, so let's see, what did price leave behind? Then here we have super clean supply. So until locally proven otherwise, this is super clear resistance for potentially a lower high for a lower low. And then you can watch also for your local structure. Say low, lower high, lower low, lower high, lower low. So even your more internal structure is bearish until you break above this level. So what I then always do is to put an alert there and watch how price behaves. So now we sweep the low. We swept the low. What can happen is that you have your range low right now here, range high there. This is your tap 2. Maybe price comes up, comes back, pushes up. Then this is your tap 3. And then you need to see what happens if you have your market structure high. Because this is your market structure low, market structure high, range low, range high. Do you deviate your range high into supply and then break lower? Then you go back to the lows again. Or do you break out of your range, break internal structure back to bullish? Then you can look for a range retest, continuation higher, and then for a bigger reversal. So right now I just draw this as a new range, but what is important to know is that this range low and that range high are your market structure levels. Because you basically have low, lower high, lower low, lower high, lower low. So this is now my range low, range high. But important to know that this high is your market structure high as well. So then delete this. This is then the local range. Tab 1, tab 1, tab 1 at the highs. And you can see that this can also go over into a model 1 to mitigate the demand here, then come up. If we then break structure, then from here I would look for a move back to the highs. And then have 1, 2, 3, 4, range high. So alert at the sweep of these lows, alert at the range high, and then you can watch what is the internal. Basically have this internal structure down, lower high, lower low, lower high, lower low, lower high, lower low. So your internal structure is right here, which is then also your mid-range. So then you can choose, okay, let's also set an alert at the mid-range right here. Because if you already break this to bullish, then instead of looking for model 1, you can look for a model 2 here. And then if you get that second confirmation, this is likely your model 2. In which this is then your Monday low, which is a pretty strong time to put in a low. So comparing that to BTC, we took the high right here on Monday and during a strong hour, which is New York. And right now price is breaking lower. So then I watch what does price leave behind. We are creating some supply. And this is the first sign of demand failing. So we had demand here, price bounced from it, failed to put in a new high while creating supply, which shows local weakness. Because this was your range where we broke out from, retested it. Then from here you want to see continuation. And now we see that price failed to put in a new high, is breaking lower while creating supply. So then I would look for potential weakness in a retrace for short. And then now you also see that you are starting to take out the start of the liquidity. So then it can be a pretty quick reversal. Then again, you have to think, where in the range am I? Right now you are here, so you cannot short here. Then all you can do is to wait for the range low to be hit and look then for accumulations again, or wait for a retrace here, see weakness, short, stop right here or right there. And see, but important to keep in mind is that main structure is still this. So until you break this local range can also just be a new accumulation before higher. And this was actually a perfect example. This was untradeable, I think, but it showed that you have market structure, high, low, high. So this is your market structure high, market structure low. Then you SFP your high, SFP your market structure high, which means that your market structure low becomes a target level. So right now we see market structure fully in play. And then you have to see, how do we come to the range low? Do we SFP the range low? Then the high is a weak target level again. Or do you break below your market structure? Then you can look for bearish continuation because you break your upwards structure from low up. This is your more refined level. You could also say that you have high, higher low, higher high, Basically, this is where internal sellers took over. So you have basically buy to sell. So this is your broader zone. You can also look at. But then you have to ask yourself, is there liquidity resting? Right now, price already took in quite a lot of liquidity. So this was a short, but I don't, let's see if it was tradable. No, it was really hard to trade because you don't have structure into your leg. You have basically high, higher low, then higher high. So even your 1 minute structure is, if you look from this low up, is also like this. So then this is your market structure level to confirm a breakout structure on the low time frame. So really hard to take this short according to my rules. But you can look for a retrace into these levels. And else I would look for accumulations back at the low again, just playing the range as always. Welcome, Matt and Daniel. I'm in this short. Clean. Yeah, it was a clean short because of you took out the high, but I always want with this, especially with low time frame, structure on my end. So for me, here was not a short, was there a short? Well, watching it from this low up, you had high, higher low, higher high. Yeah, then when you start breaking here, this could have been a short after the internal boss. And then like this. But definitely a more aggressive trade. It can turn into a nice winner, that's true. However, until proven otherwise, this is just a local range, with this being your market structure. So this is where you would expect a higher low for a higher high until proven otherwise, which is closing below your deviation threshold, below this local demand. And then you can look for a retrace, weakness, short it, and then play the range breakdown. Let's quickly look at the hype at demand and trying to break 15 minutes. Yeah, let me look at hype in a minute. First, quickly, like here. Like also based on this, we have on the way down quite a lot of demand zones, which is mainly like just daily POCs, which are untested, are acting as support, and if they are above, they act as resistance or as magnets. Right now, this looks pretty good, just an uptrend. And view up, that's early in the week, but it's not looking too but also locally, if you look at it from here, high, higher low, higher high, higher low, higher high. This can just be a higher low or a higher high. Or you need to see a super weak bounce into this supply, and then you can play the model 2. Let's look at hype. And quickly at gold. Gold took the high. And it broke internal structure. Let's look. What did price leave behind? This is demand. This is potential model 1. 3 minutes. We have 3 minutes supply. So retest into that level can potentially give shorts. Because then you have range low, range high, tap 1, tap 2, tap 3. Internal breaker structure. Give a slow pullback here, preferably with structure. And then you can short the model 2 into model 1 into model 2. Back to the range low, which is open. So waiting for that. And then quickly looking at the hype. No, you definitely was not was wrong. It was like when you sent it. Yeah, that was before we took this high. But it nicely took that high. When did it took it? Yeah, exactly on the around New York Open. Yeah, I think this will already has a high chance to play out and go to the range low again. But right here, I would not short it. I would only be interested in short if we come back here and then preferably give internal structure. Hype. Like TradingView so often doesn't give me any alerts. I don't know how it works. The hype has a huge amount of liquidity built up since this weekend. So there's also weekend liquidity. That's often yeah, liquidity the market wants to take. And here with 1, 2, 3, but that move stayed within the deviation threshold. And right now, let's see, what is the structure? 45 is breaking to bearish while creating supply. Let's put an alert there as well. This can be like a model 1 or like looks also like a bearish period 3. Currently retesting this demand. So then I like to look at it from this perspective. Communication. And then this is the more refined supply. And internally at like high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. So this is the internal, which already broke to bearish. So this looks pretty interesting to look for shorts if you see weakness here. And then you always have to look what is your volume profile. Because we have 1, 2, 3 or bearish period 3 structure confirmations, a lot of sell side liquidity. So then you want to look for shorts. But your volume profile is important. So price now retesting the value area high. So that's a zone that is super key. Then you basically want to watch for weakness in this leg up. If you see weakness or like nog even better is a retest breaker structure internally, then take shorts. Or the moment you break in your value area, then basically any retrace can be a short. And I get that full on rotation because once this low gives in, it probably is just a super quick move down. So let's put some alerts here. Mm, mm, mm. I hope this gives a retrace, because it looks like a pretty interesting short. However, it depends. You can take a short here as well, but I don't like to FOMO into trades that are this already made quite a move. But it can still give like a 2R, which is good. But from experience, I know that the moment you ape in here, 9 out of 10 times you ape in the low and then price comes back. And then this is a much, much better short you want to take. Because then even your RR often doubles. So I'm just going to be sticking to the rules. Wait for retrace or wait for a break in the value area high. And then look for the short. Because it's actually a pretty clean model. BTC close to the low already. Gold also going lower. I really need to fix my alerts because it's super annoying that they are not going off. And then after a while, then I look at my, and then I see 20 alerts missed, but I don't get any of them. Let's then quickly look at what is Sol doing, for example. So Sol has pretty clean upward structure as well, which is like here, high, low. And here we made a higher high, higher low, higher high. So here you have a 1 hour demand and structure, which means that if you break below here, you can basically look for also a lower high for then a lower low. So I'm gonna put another alert right here. It could also be a potential model 1. And let's look locally. Also here, supply created. So then you could also watch for weakness in that supply. But this is just now, I see this as a more like a range. With this being the low, this the high. And then I would only do business if you get to the low part of your demand or to your supply right there. Then let's eat. Like eat is super strong. Because this is, if we look at it from a range as well, then you had tab 1, tab 2, and this is like a fake trap, but this can still be a PO3. But ETH is already at the extreme of the deviation threshold, which is here at 23. But it tapped into this weak supply we had. Then this is the hourly structure. So that's what we can look at as well. Alert there. You could say that you have, if you look at it from this range, you have range high, range low. That this was a local model 1. Tab 2, tab 3, tab 1, retest, sell off. So then this is your technical target, is this range low. Right here. And then you have, this is the range high where you broke out from, so also demand until proven otherwise. So then I would also watch this just from a range. So range low here, range high right there. So weakness here, you can look for shorts if you did not take out this liquidity. And from here you can look, if you have accumulations again, look for longs. Very similar as the other pairs basically. So I think there's a good chance that price is gonna range between these levels. Maybe even till FOMC. Because I would be surprised if they already fully reverse it right now. But if we break structure from low up, so invalidate this demand, then I'm definitely super interested in any shorts. For now, I think we can just play this range high, range low basically, and maybe see price just rotate between these levels, creating liquidity on both sides, and then with FOMC get like the usual fuckery. So I'm gonna just wait for my alerts to go off, if TradingView is so kind to let them go off. Eat mid-range here after local model 1. So technical target range low, so you can look for potential shorts. Right now you are at mid-range, that's not where you want to trade. Hype at key demand, at value area high, has an internal breaker structure already, and also this more important breaker structure. So also here on weakness, there could be a high chance that this was already the weekly high as well, because it's put in on Monday. So I'm super interested in short on hype actually. For BTC, this could also a pretty good candidate to be the weekly high already. However, for now, I think we can also just accumulate here again, come back to that high, then maybe form like a lower high, or create that Tuesday or even Wednesday high, and then look for distributions from there. As long as this bullish structure holds, which is basically this higher low, higher high. Now range until proven otherwise, this can just be a high low for higher high, and then look for distributions. So let's see what it will be. Gold. You would almost think that demand and supply levels work. Perfect tap with the bounce. Yeah, this is just a range. Super nice distribution again. But I don't know why my alerts did not went off. With like even like internal structure even. Not valid on the 1 minute, but you see that pullback push up. So then it's, to me, it's valid. And then here the acceleration lower. Yeah, I think everything is pretty clear to me. My TradingView alerts on my phone aren't going off, or do they make noise, or even, yeah, I also have the same. Like on my laptop, I always get the alert, but on my phone, like some alerts go through, but not all of them. It seems like when I close my laptop, that the first alert from TradingView goes through. I get it on my phone, and then after the first, no, the none of the alerts go through. Super annoying because I set them at important levels, and then I get no alerts, and then I open my TradingView, and then I see 20 missed alerts, which are potentially 20 not trades, but at least POIs that I want to be aware of. Especially because I only have a few pairs to watch, so it's not that I get hundreds and hundreds of alerts each moment. Then quickly, what is the stats saying for today, this week? So daily still bullish stats. So let's see where our daily low is. So yeah, we have low here, high there. So based on stats, this low is low or is like a pretty good low to hold. Because here 15% of days took out the daily low and 15%, yeah, so 50% probability to take out the low, which is here, and 88% of the days form a new P2. And unclear if P2 is in, 65% moved further. So yeah, I think this is our daily low, this is our daily high, and that we just gonna range between these levels till tomorrow, potentially even into the FOMC on Wednesday. And this is weekly, still way too early to talk about the weekly. So nothing interesting to say about that. And then last view on here is that, yeah, we have some demand zones below. So for example, this one is from the weekend, which is at 71.4. So that's around here. So what I can also potentially see is that let's show that on a different chart like this one. Like just locally, what if this is our range? And then potentially 1, 2, 3. And then this becomes an even more important market structure low. And this is where a lot of liquidity is resting. This is basically your Friday until now range. But it's looking not really like a good range yet, because most volume is in lower part. What can turn out is that this 2 taps turn into 1. That we take out the low, go back to the highs. And that basically more or less this is gonna be the local range to watch. I think that's more likely, as said on the other chart. Yeah, so interesting, super interesting setups for the week heading into the FOMC. But for now, I wouldn't be surprised if we hold just these levels and then look to play the range. So range extreme for shorts or new highs, range lows for accumulations, range highs for distributions, and just wait for clean triggers. What you don't want is that you, especially with a week as with FOMC, that you think I need to be in a short, that you now take the short here, put your stop here, and then target it here just because you want to be in a trade, and that you, for the next 2 days, see price rotate from extreme to extreme, and that you are watching basically dry paint, do nothing, and then during FOMC your stop get hit, the other side get hit, and that from there you get the real action. So always wait for your clean triggers, because when it's obvious, it's obvious. And oftentimes that's when your third tap gets formed. So right now we have tap 1, tap 2. This can go to the highs or the lows again. If you now have patience and you wait for price to come back up, make a new high, then break structure, then this is where you want to get in. Then it's obvious, then it's 1, 2, 3. Then you know, okay, this is very likely to be distribution. Right now, this can, it's too early to say what it's going to be. This can also now turn into an accumulation again. If it takes lows again, then take the high, and then sell off. So personally, just setting alerts at the range extremes and then wait for triggers to play this local range. Lots of setups. I better get some rest somewhere to, yeah. Well, eventually all you have to do is to put alerts at the extremes, because I would not be surprised, as said, to just see price now chop everyone up. Because what are people gonna do? People are scared to miss out. Some people are bullish. They are scared to miss out. So they go long here with their stops around these levels. And a lot of people are scared to miss out on the way down. So they are getting into shorts right now, right here, with their stops right here. Because people are always greedy. So they are greedy on their stop losses. So if market maker moves price between these levels, all the liquidity below will increase and the liquidity above will increase. And then during FOMC, you get tuk, both sides get it taken out, and then the real move. So I'm just gonna wait for that. For the short side, most interested in hype, potentially. But I need to see weakness. But this looks super good. If you invert it, for example, then you can watch it if you are not biased. Like, would you be interested in longing this? Then I would now not be interested in longing it, but if you give this move down here, then I would think, oh, it's a super, super good long. So then it should also be a good short, right? And this is showing pretty clear absorption at the highs. So probably a big player trying to cap the price. So then you can expect them to defend their position if they want to grab all this liquidity. Because Hype is one of the coins with the most and the clean Wyckoff models. And it's probably because this is the flagship of, basically the only flagship of this crypto market of the last few years. First we had NFTs and I don't know what hypes. This time we only had Bitcoin. And then Hype was basically the only thing that was innovative. So I think Hype has a great future ahead. But the way for the market makers to get influence on this project is to use Wyckoff and these models to go long right here. Model 2, reaccumulation, and then here they distribute price to sell off and eventually buy back lower in. So definitely keeping a close eye on Hype for shorts here, and then to the range low again. And for the rest, I think most things have been said. Yo, it's me, Eisen. Just closed the gold short from. Hi, good to see you, Eisen. Yeah, crazy, probably good trade. I was watching for the same, but my alert did not went off. Otherwise, this was a super clean Model 1 distribution in a downtrend, which is super clean. But yeah, I missed the entry. And I'm just gonna blame TradingView for that. So that's not my own fault. Now I'm gonna wait for the range lows to see if we, because on the high time frame, let's see. Yeah, this was our range low. So basically at this range going on, like there, and then we took out the high, fall back in the range, and now we have tab 1, tab 2, and like here we had liquidity, which is now taken, and then an imbalance below it with this super clean demand. So Then we can watch if we, because technically we can extend the range to that high and to this low. And then you can see that price is allowed to make a model 1 potentially. So take out the lows again, tap that demand, and then we can watch, is this potentially an accumulation range to move from here to that supply and then from lower high. Last week I want to short here, but they front ran me with a nasty move. But I think eventually I will still get my short from that entry. So potential accumulations down here for longs, but so far this range is distributive. So main expectation would be to take out that low to complete the model 1 accumulation. But maybe it even gives a retrace, but right now it already made quite a move. So then I just wait for the range extremes. I missed it, yeah, I missed it as well. But yeah, maybe we need to set up our own alert program or something so that we do not miss the alerts. Let's see, cash is going the opposite way of the rest. Cash. I haven't looked at cash in a really long time. Let's see. I would say this is super important horizontal level. And then this is your local range. Range low, range high. Downward structure. Yeah, a bit of a weird chart. Yeah. Like most people here know, but I don't like to watch at 100 different altcoins because I can already say this has probably its own market maker, or at least this moves differently as what I like to trade. I like just a few pairs, especially Bitcoin, ETH, Sol, and Hype, and gold. But this is like if I see this, then I already think, no, I don't care what this does. Not interested for me to trade. I rather play the clean charts that I know how they move more or less. Then I think I'm gonna end the stream. Or there needs to be a question yet. What do we have? So London low, London high. Yeah, and as we know, it would be typical again for price to take out, like we took out London high right here, and we still have London low open. So take out London low, and then you have basically Asia low, New York high, which is what you often have. The Pythonix bot is not yet live. Today the campaign is now being finished, so that everyone who trades gets automatically 53, so for reduced fees, and a deposit bonus. And then that should be ready either today or tomorrow. Then I clear the setup, but I think tomorrow it's definitely live. So then everyone that trades under the link will get access to all the channels and statistics and all the stuff. So should be ready pretty soon. Let's quickly look at the higher time frame to not forget where we are on the chart. Oh yeah, that's also a thing. Because it's now the 16th of March, we can look at the monthly stats, and that shows us that it's pretty likely to see higher prices for the rest of the month. Because we have our low at the 1st of March and currently our high at 16th of March. So if we look at the monthly stats and then look at the last 5 years of data, we can see like 1.7% of the months took out the monthly low based on time statistics. So it's super unlikely for price to make the low early in the month and then the high at the 16th of the month and then a full reversal. That almost never happens. But that's a super low risk. And then based on distance statistics, 24% of the months took out the monthly low. So that's also like 1 out of the 4 times. And then how likely is it to make new highs past the current high? Then that is 81% of the months form a new P2 after March 16th. And 86% of the months moved further than 14%. So we are now in super ranging price action, but in general, 86% of the months make a bigger displacement between the current low and the current high. So based on that, stats are indicating that higher is likely. So something to keep in mind, but always just a confluence. I don't put too much weight on it, but it's something to keep in mind that it's against statistics and pretty unlikely to get a full on reversal, which most of the people I see online are expecting. So something to keep in mind, but yeah, just a confluence. Then last thing I want to do before I really stop is to look at some VWAPs actually. So let's see. If we take VWAP from the last high, so this was like our last PO3, where we had range manipulation down, then this is clearly where the manipulation happened. So this is where market makers solve. So they can watch what is the VWAP, because market makers use VWAPs. And then because we draw it from high to low, your source has to be high. And price is exactly at that level. So that is super interesting. Then we can watch from the low. So let's say from here we started locally trending up. So if we pulled from this low to the high and then use low as source because we pulled from low to high, then that is clearly at, but it's untouched. And if we use a more recent one, okay. And from this high, yeah, okay. So based on this, we are at a pretty important level because we have that VWAP from the last manipulation high. So what price often does is that it can chop around a bit from there. Then let's say if you break above, then you don't want to break below it again because then you have like a deviation kind of setup. So definitely high time frame, interesting level here. But for now, price is holding above it, which is interesting. Here we have some refined demand, which is kind of my line in the sand for the bulls. If we fall below this, then I think that this could have been the deviation, and then I'm looking for lower highs for low lows. As long as we hold this, we can basically just expect higher low for a higher high. So that was it. Can there be a DD Discord price alert app? Probably, it should be, but I'm not technical or advanced in it at all. It would be fun if we, as a group, just know the pairs. Like I only have these pairs, and most people know what my triggers are, where I want to do business. So then you could technically maybe as a group get alerts, which would be pretty fun, because then we can alert each other as well. Like we made third tap, took out the high. So maybe something to think about for later. And for now, we probably just need to help each other alert when either gold or one of these pairs makes a super interesting move. And then just benefit from that together. So I'm gonna close it off. I think plans are clear. I will update it in the Discord if I see something interesting. But as said, I would not be surprised if we chop around into FOMC, which is often what we see. Yeah, it would be a good idea because we can't trust TradingView, unfortunately. But thanks everyone for tuning in again. Tomorrow I'm live in the evening, but maybe I will probably make just a video for the premium during the day with things I'm watching. And then on Tuesday, we can also look at the weekly statistics and see if we have an edge over that. For now, the statistics are bullish, so that's something to keep in mind. But it's still very early in the week, so yeah. If someone is more technical or knows a bit how to develop stuff like that, hit me up in the Discord. Would be fun if we can really start working like a group towards mastering a few of these pairs. But yeah, we will discuss that later as well. For now, thanks for tuning everyone, and speak to you guys in the Discord. Cheers.